This is the first part of how to draw the support and resistance lines like a pro by TradeRocket Academy. In this video, you will see how to efficiently draw the support and resistance lines. At first, we will talk about the nature of resistance and support lines, and then you will see the golden rules for drawing them precisely. Next, we will introduce a strategy with a near perfect success rate for drawing support and resistance lines. Finally, in the second part of this video, we'll do 3 examples together from 3 different markets to make a concrete understanding of how this works. The first question is, what is the application of resistance and support lines? Why we draw them, and why we care about these lines? The main role of support and resistance lines is determining the regions with a high probability of having a major reversal from an established trend. Support and resistance lines are very important in any technical analysis of an asset, mainly due to these 3 reasons. To look more closely at the price changes when the chart is about to have a major reversal, to find the best positions to short or long with the best resistance or support lines, and to avoid the fake trend breakages. You'll see later in this video that on a real price chart, different support and resistance lines can have different strengths. The weak ones are easy to break, but the strong ones are the ones that form the general trend of the price, and those are the ones that create the base of our technical analysis. The next question is how we draw the support and resistance lines. There are 3 golden rules for drawing these lines. When there is a sharp reversal and the candles are bouncing from a certain price, there is a high chance that you have hit a support or resistance line. When multiple candles in a row struggle to pass a certain price range, you have hit a support or resistance line. And finally, when you see several testing of a certain price but at completely different times, there is a real high chance that you have hit a strong support or resistance line. A quick tip: remember that there is always a noticeable increase or decrease in the asset's price after a complete breakage of a strong resistance or support line. Now let's take a look at an example to see these golden rules in practice. This is the 6-hour time frame of British pound to euro. The first golden rule was that when you see a sharp reversal on the chart, you have hit a resistance or support line. Look at here, up there, and here. In the first 2 cases, we have 2 supports. In the third case, we have a resistance, and in the last case, we have a strong support. So all of these represent strong support or resistance lines. Note that the highest resistance is shown differently. It's always good to separate the highest resistance from the other ones to know where is the potential all-time high in the future trend. The second rule was that when you see multiple candles in a row struggle to pass a certain price, you have hit a support or resistance. Look at these regions. The common property between all these 6 regions is that they all include multiple candles struggling to go through a certain price. The first case is a resistance that chart struggles to pass, and eventually it could pass. And you can see that in fact, the first case is consistent with one of the lines we drew before. So all of these represent strong support or resistance lines. Finally, the third rule was that when you see multiple testing of the same price at different time, you have hit a strong support or resistance line. Look at these 5 locations. They all hit a same price with a very minor tolerance. This is a very bright sign that we have hit a critical region here. Now let's take a look at what we have done so far. From up here, we found a strong resistance, then a support, then another resistance, then we broke the previous support, that followed with a noticeable decrease in the price, then the candles are stopped at this very strong support, the previous support has changed to a resistance now, we broke that again and we had a noticeable increase in the price, and we hit this strong resistance. It bounces downward, we hit this support, we break this strong resistance, and we see another noticeable increase in the price, and we hit the highest resistance, that is potentially the strongest resistance here. Then we hit this support that was previously a resistance line, we break it, and this breakage initiates another noticeable decrease in the price, hits this support, this resistance again, and then we have a very strong decrease in the price until it hits this strong support, and then it bounces up toward this resistance. Another very important property of resistance and support lines is that their role is interchangeable, meaning that at some point a certain line can be a resistance, but another time the same line can be a support line. So it's important to keep track of their exact role in different times. In the next section, we introduce a relatively simple but very effective method for drawing support and resistance lines. There are multiple steps in this strategy. Step 1. Follow the golden rules. As a reminder, sharp reversals, multiple struggling candles in a row, and multiple testing of a certain price at different times. These are the key factors for finding your candidate resistance and support lines. Second step, order your candidate support and resistance lines based on their strength. This is an extremely important step. A very common challenge in any technical analysis is wrongful taking of a weak support or resistance line as a strong one, and when it easily breaks, it affects our trading strategy. A fast rule of thumb is that as you go from the large time frames to the smaller ones, you decrease their strength. That's why we usually recommend starting the analysis from the larger time frames and then go to the smaller time frames. By doing this, you can get a broad idea about the general trend of your desired asset, and then for more detailed technical analysis, you can go to the smaller time frames. A quick tip: monthly time frame can be very useful for stocks market, but not for crypto markets. This is mostly due to the high volatile nature of cryptocurrencies in comparison with the stocks market. The other reason is that for many cryptos, we really don't have several monthly candles of data. Therefore, lack of data can be a problem for some cryptocurrencies. Thank you for watching the first part of how to draw the resistance and support lines like a pro. Subscribe right now if you would like to find out about our newest videos before anyone else. Also, comment below all your questions. We will address them in the future videos.